everyone, and thank you for taking the time to join our presentation today. Before we begin the more serious part of our discussion, let me invite you to imagine a simple scenario. You wake up in the morning and order your coffee through an app. At noon, you pay for your lunch using a QR code. At night, you transfer money between banks, instantly, in just a few seconds. All of this happens without touching cash, without visiting an ATM, and without speaking to a teller. If financial activities used to feel slow, complicated, and time-consuming, today everything is just one tap away on your smartphone. So, what exactly makes this massive shift possible? The answer is the integration between FinTech and the banking sector. Through this presentation we, Group 12, want to invite you not only to listen, but also to analyze, imagine, and critically evaluate the future of Indonesia's financial system through the topic. FinTech, bank integration in driving inclusive economic growth and industry innovation in Indonesia. We want you to reflect on several key questions. Sparkles, how can technology reshape a country's economic direction? Sparkles, what impact does FinTech bank collaboration have on society, MSMEs, and government programs? Sparkles, are we, as digital native users, ready for the risks and challenges of digital finance? Sparkles, and most importantly, what will Indonesia's financial sector look like if these two major forces truly collaborate? With these questions in mind, let us begin our intellectual journey from the foundation, the background.
To understand why FinTech bank integration has become such a major issue, we need to look at the reality of Indonesia's digital financial landscape. In recent years, FinTech has grown at an unprecedented pace. We now have e-wallets that nearly replace cash, pay-later systems that ease consumption, P2P lending that empowers MSMEs, and blockchain technologies that offer limitless transparency. In just 1 year, outstanding FinTech lending can exceed 15 trillion Indonesian rupiah. This number is more than a statistic, it represents a massive shift in public behavior and trust. Meanwhile, the banking industry, which has operated traditionally for decades, began to feel competitive pressure. But instead of falling behind, banks started transforming. They developed open banking APIs, adopted AI for credit scoring, implemented eKYC, improved real-time transactions, and built digital services that were once unimaginable. This brings us to some fundamental questions. How can these two industries strengthen each other? Are Indonesian consumers ready for such a major transition? How can regulators balance innovation and security? This context forms the backbone of our research. The financial world is at a turning point, and we, as the digital generation, must understand where this transformation is heading. There are 3 major dimensions to the objectives of our research. 1. Academic objectives. We aim to understand the relationship between FinTech, bank integration, and the digital transformation of the financial sector. We analyze how this impacts financial reporting, banking business models, operational efficiency, and how it aligns with the Sustainable Development Goals, especially SDG 8, economic growth, and SDG 9, innovation and infrastructure. Academically, this research shows that digitalization is not merely a technological shift, it is also an economic and social phenomenon. 2. Practical objectives. For industry players, FinTech, bank collaboration opens up new opportunities. Banks can expand their markets with lower operational costs, FinTechs gain credibility and funding sources, customers enjoy faster, cheaper, and more transparent services, regulators can better map and manage risks. This ensures that digitalization is not just a trend, but a value-creating ecosystem for society. 3. Educational objectives. We want this research to help audiences become more critical and aware digital users. Technology provides convenience, but it also brings new risks, new security challenges, and greater dependence on data. Through this study, we hope everyone understands that using digital financial services requires being an informed and responsible user. Thus, the objectives of our research go beyond answering a question, they build digital awareness for the future. Research methodology. Our research uses a descriptive qualitative approach, focusing on deep analysis through literature and critical evaluation. We collected data from international journals, OJK, Financial Services Authority reports, annual reports of major Indonesian banks, previous studies on digital disruption, books and publications on financial innovation. Each source went through KeyCap 1 data reduction, selecting the most relevant information KeyCap 2 thematic grouping, identifying trends and patterns KeyCap 3 critical analysis, connecting data with theories and Indonesia's context KeyCap 4 conceptual framework building, linking FinTech, banks, regulation and financial inclusion. With this method, our research not only describes phenomena but also presents a systematic perspective on the direction of Indonesia's digital finance transformation. Prototype design. In this section, we go beyond theory and demonstrate how digitalization can be implemented in real systems. We created a prototype flowchart showing the service process in a digital financial system. From login and authentication, identity verification using eKYC, navigation through the dashboard, selecting services, uploading documents, automated data checking, risk analysis, until the final decision, submitted, verified, in process, approved, or rejected. This flowchart illustrates that modern digital services rely not only on speed but also on security, transparency, and accountability. Imagine if all banking and fintech services followed such a structured, standardized process. MSMEs could access financing faster. Customers could manage their financial needs without queues or paperwork. And the national economy could operate far more efficiently. This prototype proves that digital transformation is not just a concept, it is something concrete, measurable, and implementable. In the results and discussion section, we highlight three main ideas. 1. Analysis of FinTech, bank integration. This integration makes financial services faster, cheaper, more accessible. FinTech contributes innovation, banks provide stability. Together, they create a stronger ecosystem. Examples include QRIS boosting MSME transactions, AI scoring accelerating credit assessments, Open API enabling cross-platform collaboration, eKYC reducing verification time and costs. This significantly improves financial inclusion and economic growth. 2. Impacts and challenges. But every innovation brings consequences. Digital risks increase. Data breaches become a real threat. Fraud evolves into new digital forms. Regulators must keep up. OJK, Bank Indonesia, and government agencies must balance innovation with strong consumer protection. 3. Research implications. Academically, our research reinforces that collaboration is more effective than competition. Practically, integration helps banks transform into digital financial ecosystems, not just credit providers. In short, FinTech, bank integration does not only change how we transact, it influences the future direction of Indonesia's economy. Our main conclusion is that FinTech, bank integration is a crucial pillar for the future of Indonesia's financial industry. Technologies such as Open API, real-time payments, data analytics, and eKYC make services faster, safer, more inclusive, and more efficient. But integration also brings challenges. Digital literacy gaps, cybersecurity threats, regulatory adjustments, and unequal access to technology. Still, the potential benefits outweigh the risks. FinTech, bank integration represents not only digital transformation, but a broader economic transformation for Indonesia. To close our presentation, let us reflect on one simple question. Is Indonesia ready to become one of the leading hubs of digital financial innovation in Southeast Asia? The answer is absolutely yes, and we are already moving in that direction. With strong collaboration between fintechs, banks, regulators, and society, Indonesia has the potential to build a financial ecosystem that is not only modern, but also inclusive, safe, and fair. Thank you very much for your attention. We truly hope this presentation has not only provided new insights, but also inspired new perspectives about the future of Indonesia's financial industry. We are now ready for discussion and questions.